Hello everyone, welcome to today's lectures. I am Jessa Alvarez and today we will be discussing the principles of taxation and tax remedies. So let us define taxation as a state power and as a process. As a state power, taxation is the inherent power of sovereign exercised through the legislator to impose burdens upon subjects and objects within its jurisdiction for the purpose of raising revenues to carry out the legitimate objects of government. As a process, taxation refers to the act of imposing a tax by a sovereign state to raise revenue for the use and support of government. So, this means taxation is one of the inherent power of the state imposing taxes equitably for the primary purpose of raising revenues. For what? To carry out objectives or projects or to defray the cost of governmental expenditures. Speaking of the purpose of taxation, we do have primary purpose and secondary purpose. The primary purpose of taxation is the revenue or fiscal purpose. This is to raise revenue or funds to defray the necessary expenses of the government. The secondary purpose of taxation is the tool for general, social, and economic welfare are the regulatory purpose, compensatory purpose, and sumptuary purpose. When you say regulatory purpose, it focuses on regulation. Compensatory purpose, it is for reduction of social inequality and encourages economic growth. And lastly, sumptuary purpose, it is for the promotion of the general welfare. There are three characteristics of taxing power. These are, it is inherent power of sovereign state, it is legislative in character, and it is subject to inherent and constitutional limitation. When you say it is inherent power of sovereign state, the state has the power to tax even if not expressly granted by the Constitution. It is also legislative in character in a way that taxation is generally exercised by the law-making body of a state. And lastly, it is subject to inherent and constitutional limitation. In the absence of inherent and constitutional limitation, the power to tax is comprehensive and unlimited. It is so comprehensive that in the words of Justice Marshall of U.S. Supreme Court, the power to tax include the power to destroy. So we have scope of power of taxation. In order to easily remember, we have sarcasm. S for subject of taxation. A R amount or rate of tax. P purpose for which taxes shall be levied provided they are public purpose. K kind of tax to be collected. A apportionment of tax. And S situs of taxation, and M, method of collection. So we have here the principles of sound taxation. First, fiscal adequacy. The sources of government revenue must be enough to meet government expenditures and other public needs. Second, administrative feasibility. Tax laws must be capable of convenient, just, and effective administration, free from confusion and uncertainty. So it means tax law should be easy to understand, capable of enforcement by the administrative personnel, and convenient to the taxpayer as to the modes and methods and time of payment. Third one, theoretical justice or equality. A good tax system must be based on the taxpayer's ability to pay. It means taxes should be imposed equitably based on the taxpayer's ability to pay and benefits received. So one who earns more has the capacity to pay more. So we have here inherent powers of the state. First, police power. It is the power to enact laws to promote general welfare of the people. Next, eminent domain. It is the power to take private property for public use upon payment of just compensation. Last, taxation. It is the power to take private property, generally money, for the support of the government and for public purpose. The power of taxation belongs to the control of the state. It is, however, subject to constitutional and inherent limitation. Inherent limitation are those precincts that exist independently outside the power of constitution. Public purpose, purpose affecting the inhabitants of the state as a community and not merely as individual. For example, financing educational activities, promotion of science, maintenance of roads and bridges, aid for victims of calamities, etc. Raising of funds through taxes may be used for public purpose only. International Committee Treaty. The property of a foreign state or government may not be taxed by another. Courteous and friendly agreement and interaction between nations. Non-delegation of taxing power. The power to tax is purely legislative and it cannot be delegated by the legislator to the executive or judicial department of the government. Exemption of the government. Government agencies performing essential government function are exempt from the tax unless expressly taxed, while those performing proprietary function are subject to tax unless expressly exempted. Government cannot be taxed itself. Situs of taxation. Tax laws of the state are enforceable only within its territorial limits. Tax laws do not operate beyond the country's territorial limits. Constitutional limitations are those presented for in the Constitution. These are the following constitutional limitations. A. Due process of law and equal protection of the laws. B. Rule of uniformity and equity in taxation. C. No imprisonment for non-payment of poll tax. D. Non-impairment of the obligation of contracts. E. No appropriation of public money for religious purposes. F. Exemption of religious, charitable, educational entities, non-profit cemeteries and churches from property taxation. G. Exemption from taxation of non-stock, non-profit educational institution and donation for educational purposes. H. Concurrence by a majority of the members of Congress for passage of a law granting tax exemption. I. The power of the President to veto a revenue or tariff bill. J. Non-impairment of the jurisdiction of Supreme Court in tax cases. Now we have here the process of taxation, starting by levying or imposition of taxes, which is a legislative act. This process involves the passage of tax laws or ordinances through the legislator. Assessment and collection of taxes, which is administrative act. This process involves the act of administration and implementation of tax laws by executive through its administrative agencies such as the Bureau of Internal Revenue or Bureau of Customs. Next, payment of taxes, in which the taxpayer will contribute their share to pay the expenses of the government. This process involves the act of compliance by the taxpayer in contributing his share to pay the expenses of the government. Now, let us talk about the essential characteristic of tax. First, enforced contribution, proportionate in character, imposed for the purpose of raising revenue, used for public purpose, generally payable in money, and last, levied by law-making body.
Hello everyone, welcome to the second part of our discussion. I am Princess May Melendez, and I'm going to discuss the classification of taxes. Classification of taxes according to subject matter or object. First one is personal capitation or poll tax. This is a fixed amount imposed upon persons of a certain class without regard to property, trade, business, or occupation. One of the examples is community tax or cedula. Second is property tax. These are taxes imposed on property. One of the examples is the real property tax. The third one is excise tax. These are taxes imposed upon the performance of an act, the exercise of a right, or engaging in business or profession. Examples are VAT, donor's tax, estate tax, income tax, occupation tax, and excise tax. Classification of taxes according to who bears the burden of the tax. We have direct tax and indirect tax. Direct tax is the liability for the tax and the burden thereof fall on the same taxpayer. One of the examples is the income tax. While indirect tax is the liability for the tax falls on the original taxpayer, but the burden or incidence thereof is shifted to another. Examples are VAT, excise tax, or custom duties. Classification of taxes according to scope or exercising authority. These are national tax and municipal or local tax. National taxes are taxes imposed on the national government. These include income tax, estate tax, or donor's tax. While municipal or local tax are taxes imposed by the local government. Examples are occupation tax or real property tax. Classification of taxes according to purpose. We have general or revenue tax and special tax. General or revenue tax are taxes levied without specific or predetermined purpose. Some examples are income tax or VAT, while special tax is levied for a special purpose. One of the examples is protective tariffs. Classification of taxes according to rate applied. The first one is the proportional. This is based on fixed percentage of the tax base. Example are real property tax, VAT, estate tax, donors tax, and corporate tax. The second one is progressive. This is imposed by the local government units. The tax rate increases as the taxable amount or tax bracket increases. One of the example is income tax. The third one is regressive. The tax rate decreases as the tax base increases. This is not applicable in the Philippines. Classification of taxes according to the measurement of the amount due. We have specific and ad valorem. Specific is measured by number or based on weight or physical measurement. Examples are excise tax on lubricating oils, waxes, or petroleums. While ad valorem is based on the value of property and may require the intervention of assessors and appraisers. Examples are real property tax, excise tax on liquors, cigarettes packed by machine, and automobiles. And now let us distinguish the difference between tax and toll. Tax is the demand of sovereignty, while toll is the demand of ownership or proprietorship. Tax is imposed by the government, while toll may be imposed by private persons or entities. Tax may be based on income or on the value of property, while toll is largely based on the cost of the property use or on the cost of the improvement use. Tax is a forced contribution, while toll is a compensation changed by the owner of the voluntary use of property or improvements. And then now, let us differentiate taxation from special assessment. Taxation is imposed on all property, real or personal, in a prescribed area, while special assessment is imposed only on property which benefit from the improvement. The next one is the difference between taxation and license. The purpose of taxation is to raise revenues, while the purpose of license is to regulate action, businesses, industries, and professions. The limitations of taxation is subject to constitutional and inherent limitations, while the limitations of license is not subject to any limitations. Taxation is unlimited, while license is limited to the cost of regulation. The effect of non-payment of taxation does not make the business illegal, while the effect of non-payment of license makes the business illegal. And now let us proceed to distinguish tax and debt. The source of obligation of tax is the law, while the source of obligation of debt is the contract. The form of payment in the tax can be in money, while the form of payment in debt can be in money, property, or services. There is no interest in tax except in cases of delinquency, while in debt there is interest if stipulated and if the payment is delayed. Tax is not assignable, while in debt it is generally assignable. In tax, there is incarceration for non-payment except only for non-payment of poll tax, while in debt there is no incarceration of non-payment. According to the Constitution, no person can be imprisoned by non-payment of debts. And now let us proceed to direct double taxation. Direct double taxation means taxing twice in the same purpose and in the same year. To constitute double taxation, the two or more taxes must be: first, is imposed on the same property; next is by the same state or government; then during the same taxing period; and lastly, for the same purpose.
Hello everyone, welcome to the third and last part of our lecture. I am Rose Aliagas and I will be discussing the powers and duties of the BIR. The powers and duties of the Bureau of Internal Revenue are the assessment and collection of all national internal revenue taxes, fees, and charges, the enforcement of all forfeitures, penalties, and fines connected therewith, the execution of judgments and cases decided in its favor by the Court of Tax Appeals and the ordinary courts, and lastly, the giving effect to and administering of the supervisory and police power conferred to it by the tax code or other laws. This means that the Bureau of Internal Revenue has the power to assess and collect all taxes, fees, and charges. They also enforce penalties and fines connected with the taxation, and they execute judgments in all cases favoring by the Court of Tax Appeals, and they give effect and administer police power conferred by the tax code or other laws. And now let us talk about the tax remedies of the government. So we have distraint or distress. This refers to seizure by the government of personal property, tangible or intangible, to enforce the payment of taxes. We do have actual distraint and constructive distraint. For actual distraint, the government takes the property from the taxpayer's possession, which involves a physical transfer. For constructive distraint, the possession remains with the taxpayer, but he is not allowed to dispose the said property subject of distraint. Levy. This pertains to the same act of seizure but of real property in order to enforce payment of taxes. So they have similarities with distraint or distress. However, for distress, it is an act of seizure for personal property, tangible or intangible, while for levy, it is an act of seizure but of real property. Then we have forfeiture. This pertains to divestiture of a property without compensation in consequence of a default or offense. Compromise. This pertains to a contract whereby parties avoid litigation. Now, let us talk about tax remedies of taxpayers. The tax remedies of a taxpayer can be substantive, procedural, administrative, and judicial remedies. Substantive remedies to question legality of law, rules, or regulations. Also, to question validity of assessment. For procedural remedies, to raise non-compliance with administrative procedures and to raise lack of notice or receipt of notice. For administrative remedies, the taxpayer can protest deficiency tax assessment and file claim for refund or tax credit. Lastly, for judicial remedies, the taxpayer can file petition for review with Court of Tax Appeals. So that's it for our lecture for today. Together with my groupmate, Jessa Alvarez and Princess May Melendres, we hope that you have learned something today. Thank you